Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is January 29, 2024. This is a Kickstart video where we take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. Hope you had a good weekend. Let's get started. Looking at the hourly chart and trading last week, the price action was lots of ups and downs. The high price was right here. That took the price above the previous low right through here and high through here before the market moved lower, but the momentum could not be sustained and the price moved back to the downside through the week. In fact, on both on Wednesday, Thursday, and Friday, the price did move above the 200-hour moving average. That's a green moving average line right through here, and that should have led to moves to the upside. Actually, we did it on Monday or Tuesday as well. But the momentum each of those times could not continue, and the price fell with Thursday or Friday's peak above that level being the shortest attempt. Well, not compared to Tuesday, but shortest of the last 3 trading days, where the price just went up and then came right back down. In trading here today, the price opened in the Asian session lower and stayed, but looks like below the low from Friday afternoon or Friday afternoon's trading and into the close, and that gave the sellers a go ahead to push down into this swing area through here, this yellow area. I'll talk about that in just a second. But also in the move to the downside today is the price moved back below the 100-day moving average. That's this green line right through here. This overlay green line level comes in at 1.0842. And if we go back to not last week, but the week before, the price lows came down to that 200-day moving average and found support buyers in trading last week. On Monday, or actually on Tuesday, the price initially moved below that moving average and moved down to our swing area through here, but then moved back above it, found support against it, and moved higher. On Thursday and Friday, the price also moved below the 200-day moving average, traded above and below it, but closed above it, as you can see right through here. And in trading today, we had the Asian session and probably early European session where the price traded above and below the 200-day moving average before moving to the downside in the European session. So we are below that 200-day moving average. That's going to be a risk-defining level for the euro versus US dollar going forward. As long as the price stays below that level, it's going to be more bearish. Now let's take a look at the 4-hour chart, and I'll show you what this swing area here represents. The swing area was defined by a number of different swing highs and lows going back in time. Initially, it was some support right through here and through here. And then we fell below that level, used that level as resistance through here, defining the swing area before breaking to the upside and not returning to that level until last week's trading, where the price did come down into that area in 1, 2, 3 different times. And in trading today, we are back into that level. So that area comes between 1.08039 and 1.0824. Below that is the 50% midpoint of the move up from this low right here, going back to the I guess that's October to the December high. The 50% comes in at 1.0793, and below that would be the 100-day moving average. So as long as the price remains below the 200-day moving average, remember that's at 1.0842, and gets below this swing area right here, we'd start to look toward pretty big targets, including the 50% and 100-day moving average in the euro versus US dollar. So that's a look at that currency pair to start the trading week. Let's take a look at dollar versus yen. And again, we'll look at the hourly chart chart here, and what we can see is that the price action has been confined to fairly narrowish type of trading range. Might put another box right around here, but the lots of ups and downs, ups and downs, ups and downs in trading. Here today, the price started its rotation back to the downside, but did find support buyers against the or near the 100-hour moving average and ahead of the 200-day moving average. The 200-day moving average is this line right here. It comes in at 147.57. 100-hour moving average comes in at 80 and 91 for the 200-hour moving average. And the price with the current price currently at 147.92. We're just above that 200-hour moving average, giving more of a bullish bias for this pair. As long as the price can remain above this cluster of support right through here, the moving averages, then the bias is tilted to the upside in this up and down near the highs, recent highs for the dollar versus yen. So stay above those levels is more bullish. Move below would be more bearish for the dollar versus yen. And we have this other extreme up here between 148.45 and 148.59 as the next target and the high price that we saw not in last week's trading, but the week before, came up to 148.80. Get above that level, opens the door for further upside potential. If we move below these levels, then it opens the door, obviously, for further downside with 147.14, and then this swing area down here near the low price from last week's trading, 146.65 is the next target on the downside. Finally, if you thought the dollar versus yen was bad, the sterling versus US dollar is even worse, with all the ups and downs that have occurred in this currency pair over the last, this goes back to December, like December 12th. So it's a long time, a whole month of January included within that, nearly. As you can see, the 100 and 200 hour moving average has been blown away on a number of different occasions. The price moving higher and lower, including trading here today. The price moved above the 100 hour moving average and below the 200 hour moving average, currently below both of those moving averages. So the sellers are trying to take control. The problem is that there is no trend. The trend is sideways. The trend is up and down. We do have the Bank of England interest rate decision later this week, which may give some clarity to either more upside or more downside for this currency pair. Right now, the bias is more to the downside with the price below those two moving averages. Use that as your barometer in trading here today on the downside. Watch the 50% retracement as the next key target. You have to go back to, I guess, Tuesday's trade for the price to move below that level. Prior to that, right here, the price pretty much found support against that 50%. So a move below 126.62 would be more bearish for this currency pair. So there you have it. A look at three of the major currency pairs to kickstart your trading week. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.